All right, so good day, good day. Welcome to this session. So on this session, I'll be showing us how to actually analyze the market before you take a trade, and I'll also be sharing my strategy. Okay, nothing is taken away from me. Today is 7th of April, my birthday, and I have decided to do this for those of us who are here. And for anybody who will be watching this recording much later, because it's going to help you, it will be an addition to what you already know. And it's not going to help you for just today. It will help you for the rest of your days in the Forex journey. So I'll be sharing my screen. I'll be sharing my screen. I hope you can hear me loud and clear.
Yes, boss.
Okay, nice one. I just wanted to be sure. Okay. All right. So I'll be looking at the markets. This is my account. Okay, so this is a particular account. This account, between last night and this time, the account went down seriously because of some of risk I took. Those trades I wouldn't know, but it's one of those things. You win some, you lose some, but they are not bad trades. And I'm going to show us much later the two trades that hit stop loss. It was just a liquidity sweep because after they hit, the trades actually went in those direction and they did excellently well. But it's one of those things. I don't like exposing account too much, especially trade I'm giving out, so that you don't begin to nurse drawdown. It's better than that your trade is closed with stop loss and you have opportunity to look for a new trade than to just be looking at one trade. You are not able to look at another setup to make money, yet that one is draining you and drowning you. Okay, so um, let me share. So you see this setup? Now you see this. First of all, I'm going to show us how I set up this. Okay, so we have uh, how many indicators here? So on the main window, I have three indicators. On the main window, I have the 200 moving average, 50, and also 20. So I'm going to show you how I set it up. Then on the indicator on the indicator window, I have the RSI, all right, with a moving average, and I also have the CCI with a moving average. So we'll be doing the setup first before we go to look for a trade idea. Okay, so how do you go to, if you have not navigated uh, this mobile before, so how do you do that? Do you go to indicators? You go to indicators by clicking on this Naira sign, okay? So you click on this Naira sign. That's where your indicators are. Oh, did I click stop share? Okay, I wanted to click stop. Okay, so I wanted to click stop animation. I went to click stop share. So you click on it. So I've just clicked on it now. Now, when you click on it, if you were not having, you just see only the main chart. Okay. You were not having any indicator, you see only your main chart. So what do you do in this case? You click on this uh, F sign. So this is the F sign, and you add moving average. So this is the moving average here. You click on moving average. Okay, I believe you can see the moving average. This is the moving average. You click on it and you set up. So now I'll be showing you how we can already have them. So this is the first one. The first one, I'm going to click on it. Please take note, in as much as you have the recording, take note of this. So when you enter 50, period is 50, shift is 0, method is exponential, apply to close, okay? So you can choose any color of your choice, so that doesn't matter. Then you click on save. Okay, so the next one is 200 moving average. Okay, so the 200 moving average uh, method is 200, shifts to 0, period is 200, method is exponential, apply to close, and also note that you can use any color of your choice. Then you click save. Then the last one on the main window is the moving average with a period of 20. But please take note of this one. This one, the shift is 0, but the method is smoothed. The method is smoothed. Okay, the method is smoothed. Excuse me. Okay, so there's something, a voice here. I just wanted to. Okay, so now you choose a color of your choice and you also save. Now, note that the three different moving average, you have three different colors, all right? If you want to maintain my colors, why not? You can maintain the colors. So these are the colors. Let me show you again. So the colors are, look at them, black, blue, and red. So the the exponential, the 200 is black, the 50 is blue, and the 20 is red. Okay, so now let's now go to the indicator window. So the first indicator window, okay, so I'm going to be removing this guy. Let me remove this guy. They are not needed, they are not necessary, so that you don't complicate yourself. So let's make it simple. Okay, so now you add RSI. You add RSI. Okay, so I already showed you how to do it. To add RSI, when you come here, you click on this main chart F plus. Okay, click on the main chart F plus. When you click on the main chart F plus, you come to RSI. This is RSI. This is RSI. Where is it again? Okay, let me take this out first. Okay, so this is RSI. So you click on it. But because I already have it, I'm not going to click. I'm just showing you this is where you are supposed to come. So when you come now, when it appears, you will now open it. Make sure that the period is 14, apply to close. Then you will set your levels, okay? Now you set your level. So ordinarily by default, it comes with two levels at 70 and 30. Then you add this plus sign is to add level. This plus sign is to add level. So you add and you also put the you put the level in terms of the number you want to give to it. Okay. So the RS, the level I use 50, 15, 85. 50 is the mid level. Why 15 is the base? Why 85 is the height? Okay, so let's look at it. Then you can choose any color of your choice and you click save. So let's look at it now. This is it here. Let's go back to so you can see it here now. Okay, this first one. The first one is the RSI. Okay, the first one is the RSI. So let's go back. Now that you already have RSI, now to add the for you to add the what do you call it? To add the moving average, you come here now because after adding RSI, you now have indicator window one. So with indicator window one, you click on the F plus and add moving average. So when you click on the F plus, it will take you to to indicator list, and you now select moving average. So when you select moving average, please look at the settings. The period is 14, shift 0, method exponential, then you apply to first indicator data. Please take note of that language. Apply to first indicator data, okay? Then you can choose any color of your choice, all right, and you save. So if you come to that indicator now, this is what you have. I'm going to show you how I use it when we get there. Now we are just looking at the setup. So let's go to the next one. The next one is called CCI, Commodity Channel Index. Okay. So now for you to add a second window, you have to go to the main chart to add. So you come here and you click on the F plus sign. You click on the F plus to add commodity channel index. So let's click on the F plus. Now, when you click on the F plus, if you come here, this is commodity channel index. Okay. You can see the place that is blinking. So that's the commodity channel index. But I'm not going to add again because I already have it. So I'm just going to open it to show you the settings. So the settings are default. This is actually default. Okay, if your own has been tampered with before, all you need to do is to make sure that you put it on set to default. So you click on this button to set to default. Then you can set it to default. Let it just be on default and you save. The only thing you can do is probably change the color. All right, maybe you want to change the color, or you want to thicken the color, or it's in broken line, you want to put it to straight line. Okay, so you can do all of that, then you save. So I click save. Now, this time that you want to add moving average, you are you're no longer going to use here. You are not using the main chart now, but this is where you will now click window 2, indicator window 2. You click on the F plus to add moving average. So when you do that, the next thing you'll be doing is, this is it. Now, period is 14, method is exponential, apply to first indicator data. Then you choose a color of your choice that will meet with the what you have already, and you click on save. So this is how to set up this my strategy. All right, this is how to set up this my strategy. So, and if you actually uh, maintain this, it should be able to give you some leverage, okay, of taking your trade yourself at your own time. Now, when you get a strategy like this, you want to learn it. First of all, you need to demonstrate and use it with your demo. So when you have used it with your demo for some time and you see that you are getting results, that's when you will now begin to use it on your live account to take trades by yourself. So this the setup. I have explained the setup. Do you have any question? If you have any question, please ask now. Ask now if you have any question before I proceed to looking at the chart for us to check for a trade that will be taken now. Evie, go get me drinking water. Do you have any question?
Yes, sir. I've not been
Hello,
able
sir.
to. Hello, sir.
Yes, go ahead,
I've
ma.
not been able to set up my distance. So because you're talking, I cannot use my phone like that unless maybe if you write it out so that I can do it small, small. Listen, I old woman I be.
Okay, so you watch the video. When you watch the video,
Uh,
you take it one step after the other. No problem.
Thank you, sir.
Second, ma. Okay, so another person. Hello.
Sir, the moving average 50. Is it on
Hi, boss. We can hear you.
simple or exponential?
Come again. The moving average, the 50 is exponential. The 200 is
Hello, sir.
exponential.
The moving 50. Okay.
The 50 is
Okay, 50 is
exponential. The 200 is exponential. It's only the 20.
Okay,
Only
thank you.
the 20
Thank you.
that is smoothed. Hmm? Only the 20 that is muted. Okay, so let's go. I believe we are through with that. So now, let's now look for a trade with this strategy now. So first, now you can actually remove this thing and put them back each time you need them. So let's, because me, I like analyzing my chart plain. So before applying indicators. Now, indicators help you with confirmation ordinarily, okay? Indicator helps you with confirmation. But even without going through all of those long trades, there's something I will show you now. And when you begin to use it, you will appreciate it, and you will not only tell me thank you, you buy hamper and bring to the house, even if you're in Lagos or Abuja. You send it to Port Harcourt. Okay, so now first I want to remove this. So how do you remove them? Now you come back to this your Naira sign, okay? You click on it. So I'll be clicking on it now. Now when you click on it, you see this eye. You see this eye, okay? So you can actually close it. All right. You close all of them. Now I have closed all of them right now. You can see that if you look at each of them, they are closed, right? So now I have my main chart. Now, if you look at this chart, this is daily. What do you think? What is the market saying?
He's buying.
The market is buying. So the trend is an uptrend, okay? So now you want to make a decision on what trade to take. Number one, you want to see that the overall trend is uptrend. Now, after the overall trend, you want to look at how the previous daily candle closed. Okay, so this was yesterday candle. The black candle before this blue one now was yesterday candle. So this guy closed bearish. Now, this market that closed bearish, ordinarily, if you start the market from when the market just closed, this would not be easy for you to make a decision whether this market want to buy today or sell. All right. You want to see some reaction from probably, say, 4 hours after the candle closed. So let's assume when the daily candle closed, how many 4 hours have we done? So uh, we have done 11 to, I mean, 10 to 2, 2 to 6, 6 to 10, 10 to 2, and this is this candle now. So probably when the market closed, this was what we got. When the market closed, this was what we got. Just this candle. Yes, this was what we got. So now you want to go further to another lower time frame and see that. So with that, with this, you can see that the market is about to go up. So what do you do? Now you apply your indicator now. Now these are my indicators. Even here, from this very bottom, after this time, this market will be, it must have moved a while and the market will be somewhere here. So let's assume the market is somewhere here. All right. Now, with the level of rejection, you have around here, before this long, with due to last candle with long wick that rejected from the 200 moving average, you should know that the market is bullish, the market wants to go up. Okay. So right now, what do you do? Now you are now going to come down to your indicator windows. So on this indicator windows now look at something here. if you see my hand from here, if you look at the crosshair, it cross the main chart and also cross the two indicators. Okay. So all these WhatsApp messages, they are the one blanking the screen. Okay. So now when you look at it, you will see what is called divergence. Now, divergence is when the market is going in a buy direction. Meanwhile, the indicator window is oscillator rather. Oscillator is going. So let me put it this way. If main chart is doing higher high and higher low, the oscillator is doing lower low and lower high. Okay, then you know that that is what is called um, divergence. So let me put it here for you to see. Now, simple place to put is divergence is just put this like this. Okay, then when you come to the oscillator, now you can see how it is. So the two of them are going in different directions. You can see. Okay. Now the on the main window is tilting down, while on the indicator window, the oscillator is tilting up, right? So that's the divergence. So first you spotted a divergence. Now you have spotted a divergence. The next thing now to look at for now, for this my strategy, now you are combining how many things now? First is that the market is already above the 200 moving average. Is it slipping? It's already above the 200 moving average. Okay. Now you already had a divergence. Then the next thing now is that if you look at this RSI, the RSI has crossed above the moving average. You come to the CCI. The CCI has crossed above the moving average. What do? You buy. You buy. Now, if you go to a lower time frame, so let's go to 15 minutes now on this particular trade. Now, so 15 minutes will be clearer on the divergence. So let me show you. Now, you can see it like this. It's clearer on the 15 minutes. So now you can see it like this now. Okay. Now, if you go to the other one too, you can see this guy. You can see. So these are the divergence I'm trying to explain to you. Now, after the divergence, if you come to this lower time frame, you enter this trade earlier. You enter this trade earlier than when you use that 1 hour. So now, after the divergence, what happened? You see that the market, the RSI crossed above the moving average. On the CCI, it also crossed above the moving average. Are we together? So,
Yes, sir.
That's
okay.
all.
Okay. So with this is enough decision for you to make. That's number 2. So now let's go to number 3 now. Now, number 3 now would not be, let's just assume we are making our decisions around this area now, because when the market opened, the market will be around this area even before it got to this area. Because what happened in this side now is that there was a change of character. Okay, there was a change of character. Then this rejection we saw on 1 hour, well, let me push it to it. This rejection we saw on 1 hour was the one that came back to origin to test the other block. Okay, so now let's use here. Now let's go to a higher time frame. Let's say like 30 minutes. Now we're going to be looking at candle patterns now. Okay, or chart pattern, let's say. Okay, so now the first thing you want to actually add again is that after this consolidation around here and the divergence you have confirmed, you see that the first bullish candle after the last black was engulfing it already engulfed It already engulfed the previous black. But as at when it did that engulfing, the moving average on the oscillator had not crossed, right? So you can wait. And by the time the second candle closed, it has already crossed on the CCI. It's enough for you to enter. Okay? Then on the third candle was when it crossed fully on the ROSI. Okay? So you can enter that trade. Now, after entering the trade, there was a consolidation. You know, there are some trade you will enter and for like 2-3 hours, it's just one place, it's not going up, it's not coming down. That's exactly what happened within this region. Then after some time, the guy came down, all right, to come and test the other block. Okay? So before the market now moved. All right. So with this explanation, any question before we now go to a live one now that we want to look for to take a trade? Any question? No question. So in the absence of any question, let's now go to look for a trade that will take practically live now. Okay, then another thing I want to show us is a continuation, trend continuation. Okay, now with this, now you're going to enjoy this strategy more with trend continuation. That's actually the cocoa. Now, trend continuation is once the market has broken above 200 moving average, all right, and the 50 and the 20 is above the 200 moving average. You want to be looking upwards, okay? From 15 minutes, 1 hour, you know, you just want to be looking upward. So now let's look at this one. Now we are in 1 hour. So let's use this guy for instance. Now the market is above the moving average, okay? And so let's assume the market moved like this to cross. So you can call this one a retest. Now, but even with this retest, something happened. There was a rejection. There was a rejection around here. Okay. Now, after this rejection, what did you see? So let me expand it. Now I have expanded it. Now you can see that here there is a rejection and there is also an engulfing. Apart from the engulfing, if you've been my ardent follower, you must have heard me talk about this three candle pattern where you have one, two, three candle, the three that I circled now. The one in the middle will have the tail. The previous one will be up. Then the new one will not cover the, it will not cover the, that is, it will be shorter than the one in the middle. And you also get engulfing like this. I've talked about this severally. Okay. So with this candle formation, if you see this type, the market is going up. Number one, you are rejecting the 200 moving average, then you got this formation. Now, another thing you want to look at is this. Now, after you have seen that, you now come down to the oscillator. Now, do you know another thing about this moving average? I mean, the RSI. Now, the reason why I use the 50 level, whenever the RSI is above the 50 level, the market is uptrend. Whenever it's above the 50 level, the market is uptrend. So can you see that here the market is already above the 50 level and even the RSI has crossed, because when you look at when this guy engulfed, the RSI is below the, I mean, the RSI is above the moving average. So this is enough confirmation for you to enter this trade. So after that first move, there is a pullback. So now you want to now see that because it's an uptrend, you'll be having higher high, higher high. That could be painting higher high, higher low, higher high. You understand what I mean, right? So now it's painting, it's going to be printing that for you in the market. So the market will go market like this. So this is a pullback, okay? So after this pullback, what did you get? You got a rejection and the same three candle pattern. What do? You enter this trade. Now, whenever you take this trade, your stop loss must always be below the immediate low, which is this. Like if you took this trade now, this is your stop loss. Your stop loss is here, just below this guy. Your stop loss is here. Now, your target, the very short target is this high. Even though it is short, even though it is short rather, this is your short target. Your short target, as in when I take trade and I put TP1, TP2, all right, TP1 is actually should be your focus. Every other one is an addition if it comes, okay? So now you want to look to your left and actually see after that level, what is the next level? So you are beginning to choose TP2, TP3 based on the fact that you know that the market is going to continue. Okay. So now we got to a point here and the market crossed the 20 and 50 moving average. That's to tell you that it's no longer a pullback, but what? A reversal. This one is no longer a pullback, but a reversal. Now, this may not really make too much sense, but to make sense to those who already understood the structure and you have some level of understanding with the candles pattern, the way I've always talked about it. Okay? So, now, when it comes to a level um, of reversal, another thing you want to begin to look at for is divergence. So now, when we got to this level for reversal, now what did you see? You can see that the market was going up, all right? The market was going up. Meanwhile, if you look down on the oscillator, you can see that why this guy is going up, this guy is going down. You can see this guy was going up while this other guy is going down. You can see gradually going down. Okay. Then, if you look at this, the CCI, the one of CCI may not be too perfect from end to end, but if you look between here and here, or even between here and here, okay. So let me remove these other ones. Let me remove them. Okay, let me remove this guy. Now, so let's just use this other guy alone. So if you look here, this is a high, right? This is a high. This particular line, if you look, is a high on the main chart. But when you look at it on the oscillator where you have the CCI, you can see that that place is higher on the CCI. But when you move up further, you can see that the candlestick is higher on the main chart. So let me put a divergence there for you to see. So this is where the divergence showed up here. Okay. Then on the oscillator, look at where it displayed itself here. And it got a cross immediately. It got a cross immediately. So what do you think? The market started coming down. Okay. So it came down to a level and it pulled back to do this. So there was a change of character. There was a change of character because this was the previous low. Okay. This was the previous low. The market broke the low, all right, and came down. So which is a change of character before the trend wants to go down now. Change of character. It did this, and the next thing, it came down. It came down to it again, and came down to, now look at what happened here. Now, the market, this guy still closed below this previous level. You can see that this guy is lower than this. So even this pullback that has happened now, the market may just do a rejection and still come back down. Okay. But in this case, the trend is not, the reversal has not been 100% confirmed. So for this one that the confirmation is not happening on a lower time frame, you want to now go to a higher time frame to be sure if the trend wants to actually change here or not. So with this few points of mine, I believe I've been able to show you something today, which is my birthday gift. So right now, this video is going to be too long now because I'm going to upload it. But before I end the recording, let me just now look for a trade setup. So let me start with G4. Okay, so G4, from what I can see, is dropping. From what I can see, is dropping, but it has dropped to a level where I think it should be doing pullback. Okay, so I want to see some structure. Okay, so on you can see that there is this multiple rejection here. Okay, so you can see the level of rejection here before the market dropped. So this is actually, the market is going to go down from here. That's what it means. So now if you check 8 hours, the same thing. You check 12 hours, good. So 12 hours is already giving a standard structure already. If this market closes like this at the end of today, okay, because this is remaining 7 hours for this, so this is more like the end of today before this candle will finish, 12 hours. Okay, so if this market closes like this, then the market is going down. So now let's go back to like 15 minutes. So this guy already, let me apply the indicators. Okay, so already the move, the initial move, now the initial move already took place on this guy before the market dropped. Okay, and now it's rejecting from here. So let me see something again. It's rejecting from here to probably uh, go back up. So now let's look at something to see if we can take this trade, but it's a buy. I don't want to take a trade in the direction of the spike. I want to trade against the spike. Okay. Okay. So this is not too perfect. So we'll go down to look for another trade. Now, if you had come when this whole has happened and you saw this, okay, so you saw this rejection here, and you saw this candle pattern, and you saw that is below the 200 moving average, and also below the is below the 200 moving average, and also below the 20 and the 50. Now, the next thing you want to look at, it is below them, and the 50 and the 20, they are well separated, opening their mouths. Now, look at this. These are the three candles I said you should look at after this market broke down now. And it rejected, it came down like this. Let me show you the candles. So this is the first candle. This is the first candle, this is the second candle, this is the third candle. So you see this kind of formation here now. You want to take these trades and take it down. So what happened? Didn't the trade go down? It did. So let's go to another place. Or maybe we should let's stay on 15 minutes while we take it from 15 minutes off. So let's see G6. Okay, so on G6, the market is rejecting 200 moving average. And but let me see 1 hour, 2 hours. So this guy is looking up. What this means is that the market has been in a kind of a consolidation state before an expansion will take place now. So you want to see candle patterns, which one will address. So you can see that here, there was an engulfing, okay, to show you that the market may well likely go up from here. But that notwithstanding, another thing we are now seeing here is that now if you look at this level, there has been some level of rejection at this level. Now there has been some level of rejection at this level. Okay, let me take it out, it's blocking it. Now the market actually rejected from here. The market rejected from here. It came the rejection here again. Here, before this last candle now. So it's like this guy just spiked. It just spiked. I saw it. Okay, so let's go back there. So now these rejections, you want to pay attention to them because this market now is consolidating, is not expanding. But there is a candle pattern you will see from here now that will make you take this trade. So let's assume that this 4 hours candle is about closing like in maybe in 5 minutes or 10 minutes. And if this candle, if this guy close engulfing this guy, I will tell you that this market is going to go down. So 3 hours candle just closed now, Abi. Let me check 3 hours. Let's see what happened because a 1 hour candle just closed. Okay, so 3 hours did not close. Let's see 2 hours. Okay, so 2 hours candle is not closing yet. Let's see 1 hour. Okay, so 1 hour actually did rejected. 1 hour did rejected from a 200 moving average. 1 hour did rejected from 200 moving average, and it gave the three candle pattern. Now look at it. One, two. This is the third candle. So this spike that spiked up now is probably trying to want to go to get back to maybe close the gap or a an order block. Okay, so on a lower time frame, the market is going up. So now there's a gap here. This is a fair value gap between here and this place. There's a fair value gap. So the market may likely come back here because this was where you got a change of character now. Okay, so it has broken this level. The market wants to come back either to the other block. The other block is the last bullish candle before this impulse down, or it may just come touch the fair value gap and begin to drop. So for this type, you want to go to lower time frame and see where you can get an entry. So for now, you do not have an entry. You want to see a good pattern structure for you. So right now, this market may still go up. So let's go and look for another one. Definitely, we'll surely get one trade. I want us to get one before we stop the recording. So let's see G8. So G8 has been dropping for a while. That's what it means. G8 has been dropping for a while. So now another thing about continuation is that with what with what we have seen here now, these two candle alone. Now you can actually take this trade, and have your stop loss above this level. So let me just check something. Let me see what. Okay, so let's say this is a sell limit and TP. Okay, so the XL is too large right now but if you have a good account, this is not a bad trade. Okay, so now you take this trade, this is where your XL will be because it's a continuation. Now, why will I confidently take this kind of trades? If you come here, we are below both the oscillator and the moving average are below the 50 level. Okay, then when you come to the CCI, when you come to the CCI, the CCI, the movie is below the moving average. As if that's not enough, is minus 100. Is minus 100. So this guy is still going to drop. So let's see what 15 minutes is saying. Okay. Although if you had entered earlier, it's better than this bottom. So let's not be in a hurry because this one, the stop loss will be too large. So you can see that it just spiked now. So let's go to the next one, G9. Okay, so this is a good rejection from this level. The market is going back up, probably to close this gap, all right, or come to the other block because there's a gap here. So this market will still go up. Let's look for another one, G12. Okay, so G12 is still going down. G12 is going down. So it's just that you don't need to rush in. Like for this trade now, if you take this trade, definitely it will go down. Okay, but it's just that it can keep you, maybe your drawdown can give you some level of drawdown that will panic your account if your account is not a good one. Because when you look at even on 4 hours, you are below the 50 level. So that's to tell you that the market, all you just need for this type is for a little pullback and we are good to go. So let's see the next one. P4. Okay, so let's see this guy. Okay, so for this guy, we can say we can try, all right? Because right now we are above the 200 moving average, okay? And this guy is still very well expanded. So the market came down like this, and we got this beautiful rejection. We got this beautiful rejection here. This rejection, then this candle. So this tend to be a pullback before the continuation, and a good thing, the thing just spiked now. Okay, so and right now on this 30 minutes, the oscillator is yet to get ready. We want to see a cross, but let's not see 15 minutes. Okay, so this guy already crossed. This guy already crossed. What do you call it? The CCI. He already got a cross already. Okay, so wow. So this will be $19. So you see, all of these are things I check before I send the trade, okay? I don't just send, I have to look up and down, look left, right, center. Sometimes you find it difficult to make a decision, okay? Because your best stop loss is this place to be under here, okay? Now, does that mean that if you take this trade now, it's automatic? No. It can happen that your analysis, yes, you tried, but your try didn't, is not good enough. Okay, so now if you come to daily now, you can see that on daily, the market has been rejecting from the 200 moving average. It has been rejecting the last how many days. But between yesterday and today, the market came back to the daily. Okay, so and so, but you want to make a decision for this guy to begin to go up. We want to see if this market closes today with this guy bullish, the daily candle bullish, and engulfing the previous black, then we may likely start going up. So this is where decisions become tight to make. Mhm. You can see that there are some trades one would take. I'll just send the trade and something you've been looking at and you check, you believe that, okay, this trade will fly. As soon as you enter, that's when the spike will begin to come. It will look as if the thing has been waiting for you to finish, all right, before the spike starts. But that's still part of it. You cannot be 100% sure all the time, but that's the reason why you must trade with stop loss, because your stop loss is your sure bet that, you know, anything that happens, you have a protector. So that your protection is what will protect your account. So I want to try something again. So let's do buy limit here and take profits. Buy limit, take profit. Still 17. This is still large. But another thing why this trade is somehow dicey is that if you come to 1 hour, you can see that even though we are above 50, this guy is below the moving average. This guy is also below the moving average, and it has crossed into. So this one is still dicey. Let's go for another one. Okay, so this is 1 hour. This is 1 hour, not looking bad. Let's see 2 hours. Okay, so the 2 hour candle closed well. Closed well, it's just that we are late. Wow, the 4 hours candle closed perfectly. Okay, so it's just that for this trade, the XL will be large, but when you come to, you know, the XL will be large. But you can also reduce the XL instead of coming to the bottom. You want to get out. So let me just take this trade and see. Okay, so I've taken this trade. Now, your perfect XL is to be here. But this is $26. It's too large. So you can actually put it here, $8. So if it happens that the market takes you out, please, can you off that phone? He's sleeping. Mm. Okay, so now you take this trade now with this XL. It's better that let it take you out. What did I do? I wanted to modify. It's like I went to click another entry. Now it's better than the market takes you out on this one than you nursing a drawdown. Okay, so the stop loss level is not too bad. Okay, good. It's not too bad. Look at it now. It's not too bad. Is it raining? Do you have anything outside? Okay. Good. Now, if you look at this guy now, this is a perfect entry. Okay, because we are above the 200 moving average. We are also above the 50 and the 20. And if you look at the CCI, the RSI is above 50. The CCI is above, it has crossed the minus 100, crossing to 100 and above. So this is actually a good trade. I want to add positions, 1, 2, 3. Okay, so you can buy P6. You can buy P6. So now we'll be looking for our take profit. First was to make a decision where to put the stop loss, right? So now let's make a decision of where to put take profit. So take profit can actually be here. Go and close my window, please, fast. Go and close my window first. Okay, so take profit and stop loss levels are given. Okay, now this trade, okay, now we already got a spike. Okay, but we already got a spike. Now, if you have a good account, you can put your stop loss here. Okay, so you can put your stop loss here. eh? Okay, so you can put your stop loss here. Can put your stop loss here. Okay, so I think network is misbehaving. That's why it's rolling. Okay. So network has taken me out on that phone. I'm trying to come back now. I believe you can still hear me, right?
Yes, sir.
Okay, thank you. Mm. Okay, so, oh, network is worrying this phone. Okay, okay. I need to change the router, the Wi-Fi. Okay, so I've just changed to a better network now. Hmm. Okay, so okay, so it's like that my stop loss did not enter. The stop loss did not enter. So let me put it again. So this is a second stop loss. If you have a good account, this is actually your sure bet. Okay? But this one, at least it will give you some room to breathe and be sure. Okay? But if you have a good account, you need not be afraid. Okay, so now, but if we come down to these 5 minutes, 3 minutes rather, 3 minutes is good to go. 3 minutes is good to go, but irrespective of that, we still have to be very skeptical. Okay. So, but one thing I want to do is to begin to put take profit on all of them. Okay, so ordinarily, if I had not entered this much position on this account with this size like this, I would have, after the spike, I would have, that's when I ought to have added. But it's just I already took what I did, number I want to take. So that was why I didn't add more after that happened. If not, it's supposed to be an opportunity for me to add more positions, right? Now, another thing is that you must not trade this type. You can take only one position, your take stop loss, your take profit and stop loss, and allow that trade to do what it wants to do. Okay? But you need to get to a level before you begin to do this type I'm doing. Except you are doing it with a guide. Take for instance, maybe we're in a live session, and you also want to note that, take for instance, now this is $8, $8.80. So this $8.80, so let's assume, because we're in the direction of the spike, so you can call it $11. So let me say I'm doing $11 stop loss. $11 for this, 11 times 5, that would be 55. So which means I've decided to stake 50% of this account for this trade. I've decided to stake 50% of the account. It's my decision. Then you ask yourself, can you stake 50% of your account at once? Is that not too risky? So you should be doing like 5%, 10% maximum at a time, because you need to consider your risk. Okay, so this becomes a good setup, one of the good setup we have seen, because of considering everything we have talked about with regarding to our strategy, right? Now, if you have this type on a higher time frame, where you have the cross above, if it is like this on a higher time frame, your trade has more potency, okay, or than when it is happening on a lower time frame. But the beautiful thing is that when you begin to check structure, there are certain things you will see on a lower time frame that will tell you that the journey has just started. So now we should look at this guy. We are already is an uptrend, okay? So this market is an uptrend. What happened here was a pullback. And now this is a pullback, but yet it's a pullback, but yet this mouth, the mouth of this moving average is still open. It did not close, it did not cross. So now let me show you another thing. Now, there was a pullback here. There was a pullback. The market pulled back to this level. Even all of this one that pulled back. Yet, this moving average, the 50 and the 200, The mouth was still open, facing up. It did not cross. It did not close. Now it will become threatening that it want to change when it has closed. So take for instance, when it turns like this, when it turns like this, and begin to join our hair. But as long as it's still open, is what is telling you, and it's still open, number one. Then number two, above the 200 moving average. What it's telling you is that the market is continuing, irrespective of this drop. You can see how this drop was. It dropped to this level, and it did this on top of 200 moving average, and this guy is still open. It did not cross. So what do you do? Look at it now. This is the three candle formation that I've been showing us. This three, one, two, three, and this one engulf this one. So you see this kind of trade, man. Now let's go. You rock it like rock and roll. Okay? It's like the thing spiked again. It spiked again. So now, okay. So now this stop loss may not be too but I'm not going to change that. I'm going to leave it there because the account is not too bogus. So okay. So just like I said earlier, with this guy engulfing like this, your best stop loss is this one. So if you have account, your stop loss should be 106 106,742.12. So let's use that stop loss 102,742.12. Let me type it 106,742. XL. It may not even close the first XL. Oh. So XL is 106 742.12. That's XL. Then TP is 107,244.12. Okay, so you have it. Okay, so let me post this guy. Let me post this guy. It's a good one. So let me post it. Mm. So that is what's the asset, please? Remind me. Is P what?
P6.
P6,
P
P6.
P6. Okay, thank you.
That's spiked again. Oh.
That's spiked again. Ah, now me say go down, you go hit that stop loss. The original stop loss is the one with the 4 hours. Mm. So, and now the beauty of this trade now that I'm posting is that someone who is entering now, your stop loss is far lower than someone like me who have entered earlier. Now, most of these trades that you see, not that they are bad trades, but it's just because of the size of accounts, you don't want to. So let me see if it has taken me out on that particular position. Okay, wow. This, from what I have seen now, this XL may not survive. And don't be surprised, this guy may not spike from here again, but this XL will not survive. I've seen something now. This XL may not survive, but the other one will survive. Okay, so let me see, because it created a trend that it broke through. Now, if you check on this lower time frame like this now, okay, it actually did a divergence. So you can see here now, okay, did a divergence before this first leg and second leg. So let me show you something now. Divergence is actually a sign of reversal. There's just that how far that reversal will be is what you need a very good level of technical to. So you can see it now. You can see it did this. Now, the guy may not spike after now. It can still continue to spike because even our stop losses, but I don't want to. So the same thing on the CCI, and you can see that the CCI is below the moving average, while the same thing on this other guy as well. So all of these things, this is a smaller time frame, though you want to look at critical looking, you should always go to higher time frame. But if you get entry from now, if you see the separation of this moving average of this year, no, this guy may decide to continue the upward from here after these few spikes. He may also decide to spike and take us out before it will continue. But the truth is that with this stop loss at the bottom, this market will continue. It will continue. Let me see it again. Now we are above the 200 moving average and also above the 50 and 20. Then got this pattern, engulfing. This guy should go. This guy should go. This guy should go. All right, so I think I should stop this recording. This thing don't too long. It don't too long. To post this type self, how many persons will be patient enough to? I think what I will need to do